Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
CMHC is coming out with some new things and some new opportunities where if you make something, more energy efficient, you get points. If you, do a certain amount below market, like for new builds and things like that. Do you know a little bit about that? And essentially you can actually amortize over 40 years instead of less than that. So your cash flow can be improved. And they're just coming, by the time that we're recording this, they're just coming out with that. But it seems like it's interesting because they are giving points and then you get a certain number of points, and then you can essentially get CMHC financing at like really good rates and a much longer amortization for buildings, multifamily.
So I wasn't aware of that. I was aware of the green energy grant that they've been talking about, but that's new to me. So I don't know how do they base the point system?
This is like maybe 2 weeks ago.
Okay.
So
That's
I think
exciting.
some of them, it is exciting. So some of the mortgage brokers are getting some information on it. So if somebody is interested, and this is really for multifamily, and this is not for like your single family type of thing, but, and then when you're building brand new as well. So, but if you get enough points, like I think where I look at it too, is if you get enough points from an energy efficient standpoint, or, just doing things as efficiently as possible, you don't necessarily have to have a certain amount of, rents that are affordable, quote unquote affordable rents. You could have higher rents and you can get your points by. So it might be something that you could look into.
Yeah.
Again, very, very new multifamily opportunity. But to amortize over 40 years, I mean, why not if you can get better cash flow for it?
Yeah, I'm actually just going through the process of refinancing one of my 8-unit buildings in Brockville, but I haven't been able, that's one of those buildings where everyone pays their own bills. So until people start moving out, I can't do some of these upgrades that I'm talking about and like rent it out all inclusive. I have long-term tenants there, and they're great tenants, but they're paying the rent super low. So I'm just waiting to be able to take advantage of the opportunity sort of thing. But it's a perfect building to do something like that too. And to test things out. So I'm going to look into that.
Awesome. So tell us about your current portfolio. You mentioned multifamily that you got into, how did you get into multifamily versus other types of investments? And, what does that look like?
So my current portfolio only has, in terms of the rental, only has that one 8-unit building. So I got back into, what I ended up doing is I got into cryptocurrency actually, and was doing quite well with that. And then, or am doing quite well with that. And then I borrowed against the cryptocurrency to purchase and get back into real estate. And to me, it made sense to go. I had single family or duplexes before. I wanted to do something larger. So I found this 8-unit building in Brockville, and the numbers made sense. To be honest, I didn't think I was going to get the building because there's 11 other offers on it. And I'm like, well, this is the number. And my real estate agent said, how much do you want to go to? I gave him the number. He goes, well, what's your favorite number? I'm like, 11. He's like, all right, I'll go. It was 850. He's like, I'll go 850, 110. Right, for the 11, and we'll see what happens. I'm like, sure, whatever.
Awesome.
And he said, I'll give you the $110 back, which he never did, by the way. So maybe I'll follow. But anyways, so he ended up somehow worked his magic, and we ended up getting it. I think they were asking 780. We paid 850. The numbers made sense at that point. So I don't know if I was the highest bid. I don't know if they just liked my story because it was an older couple who owned it for 25 years. And I said, look, I'm buying this for long term, maybe my son takes it over way down the road sort of thing. So he might have sold that.
Letter with your offer?
I didn't send a letter, but I know my real estate agent did a really good job at selling us. And I think sent because my personal web page, my construction page, I have stuff about my family and my son were kind of posted all over the place. So I think he just sent a lot of that information and then had a video call with them, and they seemed to like it. So I have no idea if we're the highest, but it worked out really well for us, obviously. So that was kind of the beginning. And then we're not slowing down. Like I said, we're actually flipping another property right now. And then I have partners that we were about to buy another 7-unit building, but we backed out because of the environmental assessment. So I kind of jumped back in 2 feet because I've made all the mistakes in the past. So now I know, I'm sure I'll make more mistakes, but I made the biggest mistakes, and I'm a little bit wiser than I was when I started years ago. So
it's funny that you mentioned the numbers. Like we were sick of making I was trying to buy a cottage last year, like a second cottage in the same type of area. And we were so sick of losing out to these insane numbers. So we're like, let's just play the slots and put 777,777. That's the offer that we gave. And again, maybe it was the highest, maybe it wasn't the highest. Ultimately, 4 months later, it was appraised for 100 grand more. So regardless if it was the highest or not, I don't really care. But sometimes it's just, and we did send a letter along with it. And sometimes that works and sometimes it doesn't. I mean, obviously if you're way off on price, it probably isn't, but if you're like $5,000 difference or something along those lines, it could. Let's talk about and you brought up environmental assessments. And I think that's important, especially when you get into commercial financing, 5 or more units, depending on the lender, obviously, because I know RBC, you can still do 6 and I think maybe 7 residentially. But other than that, you are going into commercial and commercial financing, and there's different rules and regulations. So what is an environmental assessment?
So there's different phases of environmental assessment. So I'm not going to pretend that I'm a professional on this, but I can share obviously what I know from my experience is when you get into commercial, a lot of times the lenders will ask for an environmental assessment, but it'll depend on the site. So the 8-unit building that I just bought in Brockville, they didn't ask for an environmental assessment. I also went with a private lender at the time, and we're refinancing right now because we got the value of the building up by, I'm waiting for the appraiser to come back, but probably at least 150 over the last 7 months. And I didn't really have to do that much, to be honest. So it worked out well. And the environmental assessments on this other building was because it was close to train tracks, I think is where they were asking about it. So what ended up coming back with that environmental assessment is that they look at a certain radius. So what's within that radius? And I can't remember what it was. It might be a kilometer. It can't be that big. Either way, they have a certain radius that they look around it and they say, okay, well, what's in there? And in this case, I found like a mechanic shop. There's the train tracks there. There is, I think there is a storage facility somewhere else. So there's all these things that could potentially affect the soil conditions and the site that it was actually the original hotel in Cardinal, actually. And once we got all that, basically that assessment comes back and it says, because of all these things, we recommend a phase 2 assessment. So this first assessment is like $3 or $4,000. Phase 2 is like 10 or more sort of thing. And we did question it. My partners and I are like, all right, well, I want to make sure. One of the things that we learned is obviously you're going to say, I recommend a phase 2 if you're going to get paid to do the phase 2. But I understand that there's a governing body, right? That they have to follow this, right? It's kind of like a realtor, right? You have to follow a certain code of conduct. And if you don't, you'll lose your license. You won't be able to do this type of thing anymore. So in that phase 1 report came back and it recommended the phase 2. What we did is we went back to the seller and we said, look, if you go get the phase 2, then we'll discuss it at that point, right? And we'll give you the phase 1. We're trying to sell it to them. I haven't heard back from the real estate on that one yet, real estate agent. But it ended up being quite a few hoops to jump through on that particular property, having to do the environmental assessment. And what we found out on the commercial side is that a lot of the lenders don't like small towns, which our mortgage broker we weren't aware of at first until we started to jump through the hoops for this one. So that's another thing to be aware. We figured we'd do better in a small town because there's not a lot of rental units, but finding money at a good interest rate seems to be quite difficult. So we're regrouping and we're actually changing our strategy for that, that partnership.
Yeah. So just a couple of things. Yeah. So there's 3 phases essentially, right? So phase 1, I think is pretty common, right? And then it's just a matter of like, if you want to go to the next phases because they cost so much more. And then you get to phase 3, you're doing like testing the soils and that kind of stuff. And that can be like hundreds of thousands of dollars depending on the site and what it is. So ideally you want to have a phase 1 pass, but it sounds like you had some good clauses in there. The other thing that you mentioned, I think is interesting is like, yes, there's better deals, especially with multifamily in these smaller towns. And, ideally, when you have a deal, and just if someone is listening to this, is maybe you have a mortgage broker on your team and just run it by them on the exit. I think on the purchase, you could always go private, get the stuff that you need to do to it done, and then you can refinance, but you do need to know what your exit strategy is. I'm almost wondering, like in your case, if there's like a credit union or something that's local that would do it.
Yeah, we would have looked into it further if that environmental assessment didn't. But once that came back the way it did, we're like, there's no point in kind of wasting any more time on this property. Yeah. We really like the numbers and we like this particular building had really large units. So we knew that we could sever it, make the units smaller, kind of create more units. And it only had the one gas meter and one hydrometer. So this was going to be that we ran the numbers, but we were going to do that test where we get it off natural gas, put the solar panels on, make the units more more energy efficient, and actually prove that it's a good model. But unfortunately, we weren't able to do that.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?